and welcome to this programme from Baillie Gifford, the latest in a series of webinars where we talk to the managers of the business's different investment trusts and funds. Today we're talking to Lee Qian, Investment Manager of the Baillie Gifford Positive Change Fund. My name is Amy Maxwell, I'm from Citywire, and I'll be talking to Lee about how he runs the fund for about 25 minutes. Welcome Lee, thanks for joining me here today.
Great, thank you for having me.
So let's begin with the big one up top, the US and the impact of the Trump administration. Given the recent policy changes, how do you think the Trump administration's tariffs might impact the companies within your portfolio, especially those involved in the green transition or the energy transition?
Yeah, so the start of year, the Trump administration has certainly provided plenty of headlines that keep investors and the market on their toes. I think one of the concern that investors might have for a strategy like positive change, as you identified, is the impact of the Trump administration on the energy transition and the broader uncertainty that his policies can have on the wider economy as well. One aspect here is that the environmental exposure for positive change is actually well diversified and is not focused purely on renewable energy and on solar and wind, but rather it has a range of companies and that tackles areas such as infrastructure and construction, which will be provided with more support if US indeed reassure more of its manufacturing capacity. On top of that, we have companies like Xylem involved in water and John Deere that are involved in agriculture and food. And we believe those companies will be broadly unaffected by the pace of the energy transition itself. And indeed, some companies like Autodesk, which provides software for construction, engineering, and the architecture sector, could benefit if infrastructure and construction activity picks up in the US. So we are cognizant of the potential uncertainties and changes that policy could bring about, but we believe the portfolio is well placed in that respect.
So it's interesting that reshoring idea. So the companies so you're looking at something like Ashtead, which is in construction and infrastructure, to really be actually a beneficiary there.
Yeah, indeed. And we do think there will be a couple of companies that could be well placed in light of some of the policies that the Trump administration have laid out. For example, the aggressive investment in AI infrastructure, that would be beneficiary for a company like Schneider Electric, which provides electrical equipment and have a 20% exposure to the data center and market. So if America does build out more data centers to power AI innovations, then that will be beneficiary for a company like Schneider. And indeed, elsewhere around infrastructure, construction, those could be also areas where growth rate could be higher, and given the more investments that are being put into the domestic economy.
Okay. Now, staying with some of these innovations, let's move on to sort of agriculture. It's a big theme within the portfolio, and your investments, say, in John Deere, so homes in on sort of precision agriculture in particular, and where technology here is playing a big role in transforming how we farm. Can you talk to us about some of the developments going on here in agriculture and precision agriculture in particular?
Yeah, absolutely. We are hugely excited about this area, and we are excited about the application of digital technology, of increasing compute power and artificial intelligence in traditional sectors like food and agriculture. And John Deere really exemplifies some of the cutting edge innovation in this area. So the company, well known for making their iconic green tractors, but for the last 20 years have been investing heavily in digital technology. And they have created a portfolio of products and solutions that are leveraging on hardware and software innovations to help farmers farm more efficiently, use less resources like chemical fertilizer and pesticide, yet grow more food and increase the output. One really clever example of that is their see and spray technology. So those are large sprayers. You might see some of those if you ever drive past a farm. A wide broom that spray fertilizers or pesticides onto the farm. And what this technology have is they have loads of cameras in front of the sprayer, and as they move across a farm in real time, the camera take picture of what's in front of it, and then onboard GPU are able to use artificial intelligence to identify what is a weed and what is a crop. And then the sprayer will only apply the pesticide onto the weed and not the crop. So it drastically reduces the amount of pesticides that farmers have to use by up to 60, 70% in some instances. So an enormous economic saving for farmers because they are using less pesticides and less input materials, but also have a great environmental benefit because we have less chemical being sprayed onto our food and being sprayed into the wider ecosystem as well. So this is just one example from John Deere, but it highlights the potential of applying technology to the food and ag sector to create both economic value and environmental benefit as well.
And it's really interesting that they've spent 20 years developing this technology, and what a result, like reducing pesticide usage by 60%. I mean, that's a sizable margin, isn't it?
Yeah, that's an enormous saving. And pesticides and chemical are one of the larger cost base for farmers. So having the ability to reduce a key cost input for farming by such a huge percentage has a real benefit, a real value for farmers. Elsewhere, the use of autonomous technology, so tractors that literally drive themselves on the farm without needing a person to be inside, that reduces the labor requirement for farming. And a lot of farmers are struggling with finding the right people and the skilled people that can farm. So this also helped to alleviate some of the labor shortage issues that farmers are experiencing when it comes to growing food. So both environmental and social benefits as well.
Fantastic. Well, we talked there about the impact of sort of the pesticides entering kind of the food system. Let's move into more kind of food-related companies, I suppose. We're seeing a diabetes epidemic, some of it diet-related and diet and lifestyle-related, some of it obviously with type 1 diabetes naturally occurring. But we are seeing, I mean, the usual way to access this theme, as it were, would be via Novo Nordisk, but you are taking a very different route to the diabetes story. Do you want to tell us more about that?
Yeah, so we have been investing in the diabetes area for a long time. One of our longest holding company is Dexcom, which make continuous glucose monitoring devices for people who are living with diabetes. So those are small patches that are attached to people's skin and able to measure the blood sugar level in real time and send that information to a person's smartphone, for example, so they can see the fluctuation and the level of their blood sugar level without needing to constantly do the fingerprint test and take blood measure that way. this improved the lived experience of people who have diabetes dramatically. It also reduces the chance of complication from diabetes. And one really telling example of that is for children who have type 1 diabetes. In the past, their parents have to wake up the child at night every couple of hours to do a finger prick test to see the blood sugar level. But now with a patch, they can see that in real time throughout the evening without needing to waking up their child. So the huge improvements in how people with diabetes can live and manage their condition is tremendous. And we think the benefits from that is people are able to better manage their disease, reduce the chance of complication, and increased healthcare expenses down the road. And the fact that the device is so easy to use and so convenient has meant the company have seen rising demand for their continuous glucose monitoring devices. Since the inception of the strategy, Dexcom is one of our top contributors to performance. It has grown significantly in terms of number of users and then contributing to fast top-line growth as well as profit growth for the business. So a nice example of a business that are providing something really valuable for patients that enhances their lived experience, and by doing that, creating a growing and scalable business that rewards shareholders over the long term as well.
And Insulet is another company within this same kind of ilk. Do you want to tell us more about the addition? That's a more recent addition, isn't it?
Yes, that's right. So Insulet is a more recent addition to the portfolio. We took a holding in the company last year. So whilst Dexcom is focused on the blood sugar monitoring, Insulet is focusing on injecting insulin into people's blood sugar level to manage the fluctuation in blood sugar level. We hope that Insulet will follow a similar playbook that Dexcom has done in terms of creating a novel and well-liked product by people who have diabetes, enhance their lived experience, and from that, able to grow their revenue and profit over the long term. So far, the company is delivering on that, is achieving fast revenue growth in the quarters that we have held the shares in. So we hope that the company can continue its track record, continue to grow at a fast pace by providing something that their consumer and patients really desire.
So I suppose it's fair to say that both of these companies are focusing on diabetes management rather than sort of a pharmaceutical cure. So why have you chosen that route in particular?
So there are a lot of excitement around GLP-1 at the moment, and it's a very interesting area, and we have spent a lot of time learning about it from our own research and speaking with colleagues within Baillie Gifford. We think that it's interesting, but we believe it's going to be a very competitive area as well. And we are not yet sure that the companies which are leading GLP-1 at the moment, like Novo Nordisk, will necessarily be the winner 5 years or 10 years out in the future. We think there are new entrants coming in the market, which are providing interesting therapeutics that help to reduce some of the negative side effects of GLP-1 drugs, like nausea and vomiting, and just generally feeling unwell. And they might have the opportunity to start taking share away from Novo Nordisk over the long term. And it's still an open debate and an area we are following and researching to see what are the competitive shakeouts going to look like, what are the responses from Novo Nordisk and Eli Lilly, and that they want to do to make sure they can maintain their market share. So it's an interesting area, but we have more questions than answers at the moment that give us the conviction to invest in those businesses.
And valuations, I imagine, are already quite high in that space.
Indeed.
Mm-hmm. Okay, well let's move on to another area of interest within the fund. You have a significantly more exposure to emerging markets compared to the benchmark. So you've got 25% of the fund in emerging markets compared to sort of 10% in the benchmark. Yeah. So obviously you're seeing lots of opportunity there. So do you want to kind of break that down for us as some of the most kind of compelling stories here?
We are excited about the opportunity in emerging markets. So just taking a step back, 6 out of 8 billion people in the world live in emerging markets, and emerging market economy accounts to around 50 to 60% of the global GDP as well. Yet, as you pointed out, they only account for 10% of the global equity benchmark. And we believe that as emerging market economy continue to grow, they should see their share of the global equity benchmark increase. And we believe there are exciting opportunities within this growing area as well. One particular section which are very interesting to positive change are those companies which are providing improved access to financial services in emerging markets. So leveraging on smartphone and internet to provide mobile banking and online banking to people who previously didn't have access to those services. A nice example of that is Mercado Libre in Latin America. The company's root is in e-commerce and is one of the largest e-commerce platform in the region. Through that, it's helping to enable small merchants to sell more goods, reach more customers, and have a beneficial impact in economic development of that region. But on top of that, over the last few years, Mercado Libre have been using its core competency in digital technology to build out a suite of financial services offerings, which covers everything from deposit gathering to lending to insurance and wealth management. And today, Mercado Libre has more than 60 million active users of its financial services products. So a huge number of people accessing financial services through Mercado Libre. And by doing that, they can participate in the real economy more efficiently. It reduces the cost of doing business for small businesses, and it enhances the ability of people to save for a better future as well. Now, this has a tremendous positive impact on the individual that are using those products in the economic development for that region. And by doing that, once again, Mercado Libre is growing its business and seeing increasing revenue and profit growth as the adoption of those products increases.
So I think this all plays into the idea of enablement, doesn't it? And that is a key theme across the portfolio. As I can see sort of some of the top holdings, TSMC, Shopify, Microsoft, they are all enabling business to transact or infrastructure to grow these companies. So do you want to talk to me a little bit about sort of some of the technology and innovation-based companies that they're at the top of the exposure list?
Yeah, it's exactly right. There are companies which are enabling progress in society and enabling new technology and new innovations. Now, a lot of the companies I already mentioned are able to deliver their impactful products and services because of the advancement in digital technology. So in more powerful and more efficient semiconductors, in cloud computing, those technology are the backbone which are enabling those new services and products to be delivered. And businesses like TSMC and Microsoft, ASML are exactly the ones which are driving the innovation in those enabling technologies. So ASML and TSMC are leaders in the semiconductor value chain, and ASML produces lithography equipment, and that allows smaller and smaller semiconductors to be made. And then TSMC is the world's largest semiconductor foundry, producing semiconductors cheaper and cheaper and allow them to go into products like the continuous glucose monitoring devices that Dexcom are producing, or the smartphone that are powering the mobile banking devices that Mercado Libre are providing. And then we have Microsoft, whose cloud and AI technology are enabling a lot of those services to be hosted and to be accessed by individuals as well. And we are excited through looking at our portfolio in the opportunity for digital innovation in the growing demand for semiconductors and cloud computing. So we think that businesses like TSMC and Microsoft are well positioned to ride the growing demand for their technologies.
And as you say, it is going to be a very competitive space in this, like the semiconductor and the cloud space. So do you think these businesses then have wide enough moats to ensure that they're going to be the winners in the next 5 to 10 years? Or
it's an area that we focus a lot on when we analyze company is the size of the competitive moat and what drive the differentiation in their business. So I think with TSMC, they are the global leader in making semiconductors. And there are many reasons which underpins their competitive advantage. Those includes the strategic choice to only focus on manufacturing semiconductors, so they don't compete with their customers. So this is not a business like Samsung, for example, which will have its own smartphone business alongside making semiconductor. So there is conflict of interest. In addition, TSMC have benefited from scale economy. Each new semiconductor fab now requires billions of dollars, up to $10 billion of investment. This is not something that any company can go in and able to invest. And then in addition to that, the process know-how of operating those facilities at efficient scale, at low cost, at high throughput is something that required decades of experience to build up. So we believe TSMC have a very strong competitive edge in manufacturing of semiconductors. And then with Microsoft, the broader ecosystem the company has created, everything from Office that we used for our day-to-day work, to enterprise software that help businesses to keep up their IT infrastructure, as well as the cloud services they provide. All of that create a very powerful ecosystem that is the competitive advantage for Microsoft. So those are some of the aspects which we look for that give us conviction and confidence that they are not only going to be profiting from the opportunity today, but will continue to do that 3 years, 5 years down the line as well.
Excellent. And this is my final question before we get into the Q&A. You grew up in China, so your personal background has seen you witness firsthand tremendous economic progress. So I was just wondering how that has shaped you and your running and your experience of running in this fund.
Yeah, so I grew up in China in the 1990s, and I witnessed how a flourishing economy can have a tremendous positive impact on society. It was a period when the government were experimenting with market reform and allowed a greater role for entrepreneurs and private enterprises. in the economy. And they created better paid jobs, they created economic growth, and new products and services in food, water, education, that people have access to, and improve the lived experience of people in China. And I believe that when businesses and capitalism function well, they should have a positive impact like that. And today, clearly, our society have some big challenges we need to resolve, whether that is solving climate change or making sure we are well prepared for if there is a next pandemic, or just improving access to education and training so people have the right skill to flourish in an economy where technology changes every year. All of that presents opportunities for mission-driven businesses and entrepreneurs to create innovative products and services. Some of those we have mentioned so far. And by doing that, create profitable, growing businesses that will reward shareholders as well. So that is something that I'm hugely passionate about. It's something that I experienced growing up in China, and I believe will have a huge potential in terms of creating economic prosperity and a sustainable future for future generations.
Well, it certainly feels like the portfolio is filled with companies doing just that. So thank you for your time in this interview. We're now going to move to the audience Q&A, for which I've got a few questions lined up here. We do have a question around performance, wondering kind of why, since the end of the pandemic, when technology funds recovered, why has the fund not kept a pace? So perhaps we could address any performance-related concerns here.
Yeah, absolutely. So we're not going to shy away from the fact that the performance over the last 3-4 years have been disappointing and been below our expectation. I think there are a couple of areas to highlight. One is that we had a bigger exposure to healthcare, and that has been a headwind against us. So the last 2-3 years have been a down cycle in the healthcare industry. Some of the investments that were made during the COVID period have led to excess inventory levels in some of the companies that we invest in. And then a higher interest rate environment meant funding for biotech and smaller pharma companies are becoming harder. So that have led to a cyclical downturn in the healthcare industry over the last 2 and 3 years. And our higher exposure to that end market has been a headwind. Now, we continue to believe that innovation in healthcare over the long term will be very exciting and provide a lot of investable opportunities, such as Dexcom and Insulet that we mentioned earlier. But one of the lessons that we have taken away from that from the last few years is just to be a more conscious around managing some of the position sizing and the overall exposure to healthcare sector, which can be volatile in the near term. So that's one of the factors I will highlight. And then the other is that we had a fairly low exposure to the so-called Magnificent Seven in the index, which have driven a lot of the investment return over the last 18 months. Some of that is because we felt it was be a struggle to meet our sustainability and impact hurdle. And so, businesses like Meta, for example, on social networking can be quite tricky for our fund to invest in, given our impact-focused objectives. But in other areas where we can invest in, such as Microsoft, given that role in enabling cloud and technology and innovation, we are looking for those type of businesses to give us exposure to the type of exciting growth drivers that underpin the Magnificent Seven. So we're being more conscious about our underweight to that area as well. So those are two kind of high-level factors that have affected performance. And then when we look at our stock picking, our overall exposure to the stock return at an individual company level have been broadly favorable. There have been some very big winners we have identified, including Tesla and Dexcom over the long term, as well as some that have just provided very steady returns, such as John Deere. And then we also had a few companies where we picked the wrong business, and we learned from those mistakes, and we learned from how to avoid picking some of those companies that underperformed and didn't execute. And all of that form part of our learning, which we believe will help us be better investors over the long term. And then in addition to that, we are still hugely excited about the long-term opportunity for positive change. Whilst the near-term performance over the last 3 years has been somewhat disappointing, since inception return for positive change is still comfortably above the benchmark. And we believe that investing with impact focus by looking for businesses that can add value for society will be a promising way to deliver financial and investment return for our clients over the long run.
Excellent. And you spoke there about the forward-looking case. There's another question here about, can you name some of the sectors that you are feeling most excited about in the coming years? So we've touched on quite a lot. We've touched on agriculture, medtech, some of the financial services in emerging economies, enablers. Are there some below the radar sectors perhaps that you might be able to share with us, some pockets of excitement?
Yeah, I think there are pockets of excitement around education. So, obviously with fast-moving technology landscape, the skill sets that are required to flourish in the workplace changes over time. And we believe better access to education can be a very helpful tool and be an area of growing opportunity. One of the company in the portfolio is Duolingo, which provides language learning. In developed markets, some of that might feel like language learning is more for fun, but actually in emerging markets, having a second language can be a really helpful skill set for people to either find a better job or even go abroad and get training and academic experience at a top education institution in, say, Europe or America. So we're seeing rising demand for Duolingo's approach to education and to language learning, where they are using mobile app that combine gamification along with a competitive element of scoring and ranking against your friends, and to create an addictive element to get people to learn language regularly and improve their language skill. And the business has more than 100 million active users learning language with Duolingo. So hugely exciting opportunity. And we think it's still in the early innings of growth and monetization and revenue and profits growth. And that's just one example. And we are confident over the coming years, we're able to see other innovative businesses leveraging on technology and innovation to deliver better education and training experiences to individuals.
Okay. We've got another question here. Earlier you spoke about how higher interest rates were impacting biotech funding. So how are higher interest rates impacting the portfolio in general?
Yeah, so higher interest rates if everything holds the same, would mean that the market are discounting future cash flow at a higher discount rate. So there will be a negative impact just on the valuation. But there's also an impact on the business fundamentals. And here is where our focus on businesses with strong competitive advantage, good return on capital are a helpful differentiation and protection against the higher interest rate. In some instances, higher interest rates can actually be beneficiary because it leads to a more rational competitive environment. So the companies with the strongest competitive advantage are able to leverage their competitive edge and grow more profitably. We saw that with the case of Mercado Libre over the last few years. With a higher interest rate, some of its competitors has fallen away because they couldn't simply raise loads of cheap financing and then spend it on marketing and promotion just to grow user count without the prospect of breaking even and earning a profit. As competition become more rational, those businesses have fallen away, and Mercado Libre has actually been gaining market share and outgrowing the market as a result. So there will be instances where higher interest rate can be a tailwind for some of the businesses we invest in.
Okay. A question has come in about what is the fund's perspective on holding significantly large holding in Tesla? So it took a while for it to come up, but the Tesla perspective, in the news a lot. What's the fund's view? What's the management of the fund's view on it?
Yeah, so we have been a long-term investor in Tesla, and it has been a poster child in terms of the energy transition and popularizing electric vehicles and really driving the industry forward in the adoption of a cleaner form of transportation. At the start of this year, however, we actually sold our Tesla holdings for positive change. And a big part of that is valuation. The share price of Tesla have increased significantly following Trump's election last November. But we felt that the Trump presidency doesn't really affect Tesla's long-term prospect significantly. And the huge increase in valuation provided the opportunity for us to sell and move on from that holding. So we felt that at the start of the year, the higher share price meant the risk reward of continuing to own Tesla no longer makes sense, and we exited that holding earlier this year.
So it was a nice high to exit on.
Yes.
Okay, we've got a similarly related question here. Have you considered Starlink and possibly kit suppliers to Starlink?
Yeah, so space exploration is an interesting topic. Actually, John Deere partners with Starlink to bring some of the satellite communication to rural farming communities that doesn't have very good 4G, 5G coverage. So it's definitely having an impact on the real world. Now, we can't invest in SpaceX within the Positive Change Funds, given it's a private company, but we are on the lookout for potential suppliers or other companies which are helping to drive forward the space exploration industry. So it's an active area of research. Who knows, maybe in a few years' time, there will be companies in the portfolio exposed to that theme.
Excellent. Well, that's all we've got time for, I'm afraid. So thank you, Lee, for your time. And we've got some more sessions coming up like this, so do keep an eye out for those if you did find today useful. Thank you very much.